Good afternoon and Happy New Year. We are happy to welcome you to the first edition of our new interview series, which is called the Luxembourg Private Equity and Venture Capital Stories. Like last year, and done in the past, you can certainly ask your questions via the chat function or the Q&A button. Today, again, we are very happy to host Peter Veldman, Head of Fund Management at EQT in Luxembourg. Hi, Peter. How are you?
Very good. Thank you for having me here, Stefan.
It's a pleasure. How was the start in 2021?
I mean, like I said, when I came in, Christmas is long behind us. So we had a quite busy start of the year and a good start of the year. Yes, thank you.
Great. Then let's start our interview now. What can you tell us about EQT? When was the firm created? Where and by whom?
EQT was actually established back in 1994, and it was a joint effort between the Wallenberg family, EA, a US private equity investor, and SEB banker. And it was based in Stockholm. Over the years, EQT has grown from there to be a Nordic player initially, and it became an integrated European player with a global presence today.
EQT as a GP manages many different vehicles and strategies. How broad is the EQT scope?
Today we have raised over 60 billion in assets, and we have 7 different strategies that we manage across the globe. If we look at the strategies, we have private capital, which is basically 70% of our assets under management. Private equity is the biggest fund there. It invests in the LBO type of investments. Then we have ventures. We are the second vintage ventures, all managed here out of Luxembourg, investing in tech-enabled companies, really looking for that new gem and unicorn. And then we have public value, which actually uses a private equity playbook, but then to invest into listed equity markets. Initially, we start with these new funds having a Nordic approach, but hopefully over time we will actually expand into the German-speaking region of Europe and further into Asia and US.
EQT is also famous for the arbitrage it did concerning the fund jurisdictions it used and opted clearly for Luxembourg. What were the reasons and what attracted you specifically?
Maybe, sorry, Stefan, the other question wasn't finished, but because we also have a real estate, real asset business line, okay. Which is the other 30% of the assets under management that we have. And this is something that started back in 2008. The infrastructure, we're currently raising our 5th fund. It has a global presence, and we have a real estate business, which is looking into value add real estate investments. And I think your next question was really about the arbitrage that we have between the different managers. So if I take us back in time, up until 2010, basically all the funds were managed out of Guernsey offshore. And EQT was one of the first alternative investment players to make the move to come onshore. And without having the proper knowledge how that would work out, we actually landed for different reasons in London, in Amsterdam, and in Luxembourg. And what we realized when AFMD came into play in 2013, which was back then the first regulation that private equity was facing, we thought to play a safe bet and be regulated in all 3 jurisdictions. And that's why we had those three jurisdictions. What we realized afterwards is that unfortunately we had to build these 3 jurisdictions actually in silos, as there was no level playing field. We had always imagined that AFMD was going to deliver that level playing field, but both from a regulatory perspective, from a tax perspective, and also from an operational perspective, we saw the difference in the 3 locations, and that's why we felt that we had to really look at our domiciliation strategy, and that was 2016, and that's when we decided to actually move our funds to Luxembourg and to concentrate all our activities from the fund management here in Luxembourg.
It's great that you added also the real estate or more infrastructure activities, because we're also certainly interested by this one, and we'll try to push then further webinars this year around the topic and other strategies which should be highlighted in the future. By the way, how many EQT colleagues do you have in Luxembourg and also internationally?
Well, internationally, we are more than 700 people. And here in Luxembourg, we are close to 50 people. For each of the business lines that we mentioned, which are 7, we have a conducting officer. And then we have a number of additional conducting officers for the compliance, risk, and valuation. So that's around 10. We have the board with 5 board members, and then we have around 40 people, managers and associates and assistants that support us here in Luxembourg locally.
On the structuring side, can we then say that the majority of your fund structures are here actually in Luxembourg?
Yeah, the vast majority is actually here in Luxembourg. The interesting thing, Luxembourg office was actually established in 2006 as an office to really manage all the acquisition structures. Of course, now we have also a number of the fund structures here, and definitely all the ones that are onshore moving to Luxembourg.
And if we look at last year, is there a particular strategy that you would like to highlight, struck your mind?
Well, I think what we have added and what we have seen, and it's something that's about to come, is actually the growth strategy. So that's really filling the gap between what we have today, private equity and ventures. And we want to make sure that we have a growth strategy, which by the fact that we are a listed company and that we have a strong balance sheet, we actually started to fund from the balance sheet, and we already made the first 2 investments on that one.
And the audience also used this opportunity today of this webinar to ask a few questions to Peter. He's quite busy man, and that would certainly make sense. Now let's move on then to Peter Veldman, the professional. Can you tell us how did you enter and end up in the private equity industry, and what did you study, by the way?
I studied business economics in Amsterdam, and then if you wanted to end up in finance, I was born and raised in Amsterdam, and this was also in Amsterdam. You would either join ABN AMRO or ING in that trainee program, and I chose ABN AMRO. And after the trainee program, I joined the trading desk on the buy side actually. And after 8 years, I moved on to an investment boutique. And that investment boutique was running a fund that had the opportunity to invest both in listed equities, but also in private equities. And that's where I had my first experience as being a member of the valuation team.
Great adventure. Any tips you would like to share with our talents in order to enter the field successfully?
Well, what I think, I'll answer this a little bit more broad, if that's okay with you, because what I think is super important if you want to be successful is that you really look at your own values and your own culture that you really want to be matched up with, and that you have a broad, let's say, level of experience and a broad knowledge. And then you match that with the firm that you're actually looking at, or the firm that's looking to hire you, to make sure that you have the same values, you share those values and culture. And these values are not just like 5 words on a wall, because the soft skills are so important to match. You can never change this, or very, very hard to change those. But I think the hard skills, we can definitely learn you. LPA can, of course, help and assist you to get the right hard skills. But I think soft skills are super important to be able to work in this industry. So I think that's probably one of the items I would start with as a young professional.
Completely agree that also the human aspect and factor is quite important and should be nurtured in a very digitalized world, which then will increase also.
Yeah.
That.
Yeah, no, and we had my colleague Nick Kerwin did an interview with you as well last June to really elaborate on how we nurture our talent, because that's the only asset that we have as a firm, and by far the most important asset that we have as a firm. So
great philosophy. Any inspiring book, podcast, or series you would like to recommend to our audience?
Yeah, no, definitely. The donut economy. I think that's an Oxford professor who wrote that book. Very interesting. And the claim that she made is that actually all the current economic models assume that there is a circle, but they're actually not. And I think that's the exact thing that we need to change, or that's what she says in her book. we need to make sure that we create that circular economy, really focusing on reusability. So that's one book that I can definitely recommend. Another thing is a website actually that I would like to recommend, which is like Water Bear. It's established and founded by also the producer of My Octopus Teachers, for those of you who've seen it. And I think it's very, very interesting because it shows what's happening to the world. And if we care about our planet, what we can do about it. And the platform actually allows you to not just see what's happening to the world, but also to connect and actually invest if you want to, or support to make sure that we look after our planet, which I think is one of the key themes for the future.
Quite inspiring. We'll also have then a look at that. If you want, then we could proceed to the Q&A. We have here one question. So EQT sold its credit business last year. Just 1 second. And do you want to expand in other fields?
Yes, I can definitely touch a little bit on that. One of the reasons, or the most important reason why we sold our credit business, the key element that we feel that we bring as EQT to the table is we have a huge industrial advisory network. And those industrial advisors are actually ex-business members, ex-CFOs, CEOs that have a very, very strong sector knowledge and we bring those when we do our due diligence. We bring those when we manage our portfolio companies because they take board positions. And we felt that this added value that we bring as EQT, where we can really drive our value creation in the portfolio companies, was something that was very tough to do in credit. And hence, we believe that that was not a business line that we wanted to continue to be investing in. But by that same means, if we can find additional business lines where we can really utilize those strengths, making sure that we're on the forefront, using our industrial advisors, creating the added value by utilizing our digital team, creating the added value by including our ESG approach, we would definitely have a look. Absolutely, yeah.
And also your forecast for 2021, no crystal ball, but what are your first impressions right now?
I think everyone was expecting that the virus would, of course, quiet down in a faster pace and that we go back to our new normal, however that would look. But I think, unfortunately, it's a bit more of a gloomy scenario, so it's going to take a bit longer. So I think, and that's what I think one of the most important things there is that we really need to look after our staff and look after each other, because yeah, we're going to be locked up for a little bit longer. I was very happy that I could do the interview face to face rather than from Zoom. But I think that's going to be one of the challenges. From a financial markets perspective, I think what we see, and Biden's just been inaugurated, equity markets have responded really positive. There's a lot of cash coming to the market. So yeah, I think we have from a private equity alternative investments perspective, a good year ahead, good pipeline of IPOs coming.
You also mentioned then the pandemic, for sure. Any lessons learned on the operational or logistical sides in your firm?
Yeah, it was definitely a learning. I think that there's a few key learnings that we have. I think and again, the most important thing by far is just, let's say, the well-being of our own staff, that of our portfolio companies, but also that we take a responsible approach to the rest of the people. So EQT took a quite aggressive approach in closing down its offices early March, and gradually opening and making sure that we support societies where we can, support our portfolio companies where we can. And I think one of what we've done after the global financial crisis in 2008 was really to make sure that we had a thematic approach. And I think that thematic approach really pays off because we see that for a number of investments, we have quite a bit of a tailwind actually from Corona. And I think the third part that I wanted to mention here is actually that preparation is everything. We were prepared for a storm to come for quite a while. Did we expect Corona? No, for sure not. But we had scenarios for each and every of our portfolio companies, how we can guide them through a storm. Because to manage a portfolio company that's in a growth mode, it's something completely different and requires completely different skills than to manage them in a crisis mode. So I think that's one thing. And then I think the final thing, and that's also a little bit of a reflection on my own, is that I'd never worked a day from home prior to COVID. And I've now been working on a regular basis, 4 days a week from home. I used to be on a plane every week at least. So I think there needs to be a smarter way how to do this. And I think that will actually help us to further drive diversity and inclusion. And I think it will open the marketplace to much more participants. So I think we should look at the bright side of this, not trying to oversell it, but I think that those things we need to really keep and make sure that we utilize those going forward.
Very interesting trends to reflect on and potentially also to look at on our side. And just a last quick question. Yeah. Any wish or expectation for this new year?
Yeah, well, I think that private equity has a very, very important role to play. And with all the upcoming ESG regulations, I think the private equity players need to take their own responsibility. And I think in all the transitions that we need to see that need to happen to make sure that we preserve our planet, I would like them to step up and take their own responsibility. So that's something that is my wish, if you want to say so.
A big mission for everybody. Let's then participate to that.
Absolutely.
Thanks a lot, Peter, for your insights. It was a great moment, and we will certainly hear more about EQT very soon again.
Thank you very much. Thank you for having me.
And dear audience, so this was the first edition of our new Luxembourg PVC stories. We will continue on a monthly basis. And I just wanted to quickly introduce you to also our next event, which will then done by the association. So first of all, the Career Adventure. This is the rebirth of our HR talent seminars of last year. So they will continue with lots of interesting speakers. That's really a strategic element. We have our New Year party, which then will have some guest speakers from Lux Unplugged and also Sleep Like a Boss. So not directly PE linked topics, but quite entertaining. And we will have then a webinar on SFDR with also some guest speakers from the CSSF and some of our co-chairs. And finally, also the Corporate Venture Capital webinar, also in February. So we hope to see you soon. Thank you a lot for your fidelity, and let's then do a great year of 2021. Goodbye.